Owning 10 Tesla stocks may actually be far more than you think it is. There's no doubt that the stock has been through a rough year. However, the market now appears to be re-enamored with high-tech equities in general and in electric vehicles, particularly with Tesla taking the lead and prices returning to former high levels. This begs the question, what is the future of the stock, and how does this apply to investors? In this video, we'll be looking at Tesla's record, its key drivers, and predictions from analysts. Why do we think Tesla's future price will make you rich? Keep watching to find out. Tesla's status as a law unto itself is well known. As the company continues to make ripples in the stock market, many have been reflecting on the past returns that early investors have made and future gains possible as the company continues to climb upwards. According to analysts, you would have nearly tripled your money if you had invested in Tesla in November 2020, when the stock was valued at just over $400 a share. According to CNBC calculations, a $1,000 investment on November 2, 2020 would have been worth roughly $2,940 or a 193% return just the next year. Returns are significantly higher if you go back a few years. Tesla was selling at roughly $38 per share 6 years ago on November 2, 2016. Equally, a $1,000 investment would have risen about 3,025% and be valued roughly $31,286. The S&P 500 index would have returned only 142.4% during the same time span. You would have made even more profit if you had invested in Tesla in 2011, which was then selling at just $5. The company's growth speaks for itself as well. Tesla went from selling only the Roadster to offering the Model S, 3, X, and Y during the course of those 11 years and eventually became profitable. It is true that regardless of Tesla's enormous stock increase, any single stock can outperform or underperform, and previous performances do not guarantee future outcomes. However, the pattern here is quite clear. Owning 10 Tesla stocks is far more than you think it is. Because Tesla is a growth stock, the percentages keep rising to shocking levels, and future returns could be huge. It does come with high risk though, so you have to be sure that's a price you're willing to pay. It had been an unsteady year, and many investors had lost faith over the course of the past few months. This sparked a huge sell-off, driving the stock price even lower. More faithful investors have finally been rewarded for their patience. Tesla's stockholders have seen a return to more familiar territories, with the stock's price rising more than 30% in just over a week to about $1,000. This has returned it to levels last seen in January, and it's made a strong rebound from its lowest price of $700 in 2022. The shadow created by events in Ukraine and the introduction of sanctions on Russia surely contributed to the downturn. Market sentiment was also shifting away from high-tech stocks in general and the electric vehicle industry in particular. During the sell-off, the company pushed to make even more tremendous accomplishments. Eventually, Tesla's stock price was boosted by the completion of its $5.5 billion production factory in Germany and the delivery of its first Model Y. The factory is seen as critical to Tesla's European ambitions and eventually company expansion. So what does the future hold for Tesla? And why do we think Tesla's expected future price will make you rich? First, we need to look at the key drivers of Tesla's stock. The fact that Tesla is continually innovating and is led by an entrepreneurial maverick in Elon Musk is the most evident element fueling Tesla's stock prices. There's also no doubt over the next few decades, the world will accept electric automobiles as the norm. With Tesla being ahead, it will reap huge rewards, and so will its investors. As the world catches up, its value will increase, and current investors will have their initial investment increase in surprising percentages. Analysts seem to agree with us on this. Deloitte researchers stated that their global electric vehicle forecast is 29% for a compound annual growth rate attained over 10 years. According to the researchers, the total electric vehicle sales are expected to rise from 2.5 million in 2020 to 11.2 million in 2025 and then to 31.1 million by 2030. They believe electric vehicles would account for around 32% of total new car sales. Tesla's statistics definitely support these numbers. In the third quarter of 2021, Tesla generated $13.8 billion in revenue, up 57% year over year, with a 70% increase in gross profit to $3.7 billion. It also reported a $3.2 billion increase in adjusted profits before interest, taxes, depreciation, and amortization for the period, up 77% year after year. The business announced the third quarter of 2021 to be a record time in several ways in a report accompanying the results. It added, "We achieved our best ever net income, operating profit, and gross profit. We also achieved an operating margin of 14.6%, exceeding our medium-term projection of a low operating margin." Tesla also stated the level of profitability was achieved despite the average selling price falling 6% year after year in the third quarter as a result of the shift to lower-priced automobiles. Electric car demand is still undergoing a structural transition, Tesla continued. "We believe that the more Teslas on the road, the more Tesla owners will be able to educate others about the advantages of electric vehicles." Tesla also echoed the experiences of other automakers when it came to industry-wide issues, and highlighted how these issues were addressed. "We believe that the company has a relatively solid handle on this. Statistical data predictions are also in line with our beliefs on Tesla's expected future price. However, it's important to keep in mind that analyst projections and price targets for Tesla stock are subject to change. Wallet Investors' algorithmic forecasting is quite optimistic about the company's prospects. The stock is a very good long-term investment according to the report, and the price might grow to $1,340 in the next year, and $2,999 per share in 5 years, according to the company's 5-year prediction. Some experts aren't as enthusiastic about the company's forecast. Danny Hewson, a financial analyst at AJ Bell, is pessimistic about the company's long-term stock price potential. In an interview, she said that only an eternal optimist expects Tesla's shares to continue to soar the way they have. She continued by saying Tesla will have a lot of opportunities in the next 5 years, but there will also be a lot of competition. Tesla has an advantage because it was first out of the gate, but Hewson warns that once the field widens and consumers have more options, Tesla will have to work much harder. Tesla bulls, however, have good reasons to believe that given enough time, the stock will continue to rise. When it comes to the state of the automobile sector, Jefferies analyst Philippe Hauchois also believes that Tesla is operating at a higher level than its competitors and will continue to do so. When asked for comment, Hauchois said, "While we've been lowering projections across our original equipment manufacturer coverage, we are raising them at Tesla due to price increases that outweigh the risk of volume and battery cost inflation." He mentioned looking forward to Elon Musk presenting Master Plan Part 3, with cash accumulating at a faster rate than Tesla's ability to develop physically. However, there are still dangers to consider, namely supply chain issues and, in particular, the worldwide chip shortage. We speculate that the recent price increases, as well as other favorable occurrences, offset these concerns. Production at the Austin plant is already underway, while the Berlin plant commenced on March 22nd, and the Shanghai facility is on track to boost capacity to 1 million units. In addition to these bullish catalysts, the main reason we're particularly optimistic about the future of this company is that rather than focusing solely on cost, Tesla has also made an effort to improve the quality of its vehicles. We strongly believe that the major reason Tesla has come this far is due to its innovative nature, and as it is, they are barely scratching the surface of their grand plans. With so much in store, Tesla is sure to disrupt the tech and automobile industry. This will definitely reflect in the stock's value, as it is a high-growth stock after all. That being said, remember the statistics we mentioned earlier on the people who invested in Tesla a few years ago? If you own 10 stocks today, just think of how much more valuable they will be in the future. How many Tesla stocks do you own? Will you be investing even more? Comment down below.